back to Money Talks. I'm Mia Lee, escort, stripper, CPA, and recovered banker. Today we're going to talk about gold and precious metals as an investment. I'm going to start with gold. First, let's step back in time to grasp the historical significance of gold. Gold isn't just a metal, it's a living relic of human history. Ancient civilizations from the Egyptians to the Romans prized it for its beauty and rarity. Gold coins, like the Roman aria, were once the universal currency. The gold rush in the 19th century is a testament to the enduring value. Throughout history, gold has held its value, transcending empires and currencies. Nowadays, gold acts as a haven during economic crises, such as financial meltdowns or pandemics, when its stability and tangible nature make it a refuge for investors seeking to safeguard their wealth. The combination of its inflation-fighting properties and its crisis-resistant appeal positions gold as a really valuable asset that can weather the diverse challenges posed by global economic conditions. Gold plays a really crucial role as a hedge against inflation because its value tends to remain relatively stable when the value of paper currencies decline due to inflation. The relationship is particularly significant in times when central banks engage in substantial money printing, like recently during the pandemic, because the scarcity and limited supply of gold make it a valuable asset for preserving wealth. So during periods of high inflation, gold has historically seen increased demand and higher prices because it offers investors a reliable means of safeguarding their purchasing power amidst currency devaluation. Gold can serve as a buffer against the eroding effects of inflation, making it a really strategic component of diversified investment portfolios. Let's explore how you can invest in gold. Owning physical gold like coins or bars might seem cool, but it's probably really cumbersome in terms of acquiring it and then storing it safely. Instead, there are gold ETFs. There's almost an ETF for everything, guys. An example of this is GLD. That's a gold ETF designed for convenience. So when you buy a share in a gold ETF, you're buying fractional ownership of physical gold that is stored in secured vaults elsewhere. And because it's an ETF, it's easy to buy and sell shares of this ETF on stock exchanges. One thing I want to caution you with here is don't invest in gold mining companies. These companies are extremely risky, extremely speculative. These companies have a host of operational challenges, they're subject to market fluctuations, and they're even subject to geopolitical uncertainties. You have to get a lot of mining rights to mine gold. So if it's a company that mines gold, their investment could just get wiped out if the geopolitical environment in a country changes. The straightforward path of gold ETFs or physical gold are definitely more predictable and less volatile than gold mining companies. Let's talk about the tax implications of gold investments. Navigating the tax implications of gold investments can be a little bit challenging. When it comes to physical gold, it has a unique advantage. It can go off the grid. You can keep your gold bars or coins somewhere safe, like at home or at a safe deposit box, and this is now completely offline and away from any financial system. The privacy can be appealing, but it also means that you're responsible for tax reporting. When you go and sell that gold, you're responsible for whatever tax implication of doing so is, because eventually you can't pay for things in gold. You're gonna have to exchange that gold for some kind of fiat currency, dollars, euros, whatever, in order to spend that on anything that you need or want. When it comes to gold jewelry, the situation gets even more complicated because jewelry is not considered an investment for tax purposes. You're gonna wanna consult a tax professional in terms of sales on jewelry. I will warn you though, that jewelry doesn't really tend to retain its value. If you have a collector's piece, it might go up in value, but generally speaking, most of the jewelry that most of us wear day to day is probably not going to go up in value. If anything, it's actually going to lose value simply because as an asset, it tends to depreciate. And the secondary market for used jewelry is pretty unfavorable. I know this because 15 years ago, I was engaged and my ex-fiance bought me a ring, and I am not a jewelry person in case you couldn't tell. Of course, I went and sold the ring because what am I going to do with this rock? I don't know what he paid for this thing, but the ring was probably appraised for about $10,000. When I went to sell it, I was thinking like I would get somewhere close to the appraisal value of $10,000. That's what the insurance appraiser said my ring was worth. I probably sold that thing for about $2,500. And that was with me pitting offers against different jewelry merchants and all of that. And that's because it's really common for jewelry to lose a substantial portion of its value because it's just not as desirable on the secondary market. Like people don't want to use engagement rings. Jewelry, not a great investment. If you want to have jewelry because you love jewelry, cool, but pretty shitty investment. While physical gold, like coins and bars, offer you privacy, the tax implications can be much less clear-cut. The simpler option is to buy digital gold via an ETF, in which case you're going to get tax tracking from the administrator of that ETF. So that can be much, much easier for tax reporting purposes. Finally, I want to talk a little bit about other precious metals, specifically silver, palladium, and platinum. Silver, often called the poor man's gold, dual attributes as both a precious metal and an industrial component. So because silver is an industrial component, it's also subject to economic downturns and market conditions that affect industrials manufacturing. So if silver is a key component in manufacturing certain components and then demand either goes through the roof or crashes through the floor, that's going to impact the price and value of silver. Platinum, which trades at a premium to gold, instead of trading at a discount to gold, which silver does, also has both the dual attributes of being a precious metal and an industrial component. So platinum is also going to be subject to economic uncertainty. And then finally, palladium is really interesting because it's primarily used in the automotive industry. Palladium has seen really significant growth in demand because of emissions regulations. It's resulted in appreciation of prices for palladium just because people are moving to greener cars and whatnot. So palladium's actually in recent years seen a significant rise in its value. I'm Mia Lee. You can take the girl off Wall Street, but you can't take the banker out of the whore. Drop me your comments, questions, and suggestions for future content.